SoFi just told a bunch of investment bankers incredible insight about the stock and laid out the massive growth potential. Now, not just investment bankers should know this, but you and me, the retail investors. So I'm going to break it down for you, plus what SoFi stock is really worth, where the support and resistance sits, and I'm going to leave you with a cheerful note from Winston, well, he's in charge around here if you are not aware of that yet. Let's get cracking. Before we do, I want to encourage you to do something for yourself. Give an hour of your time to learn how to trade emotionlessly. Completely rule-based, no more guessing, just rules on when to enter, when to exit, fully automated. Come and join me on Tuesday and I'll teach it to you completely for free. And you just go to felixfriends.org/webinar here and sign up, grab one of the 500 spots we just made available to make you a better, smarter investor and potentially make some real money in a couple of hours a week. So what have we just heard? Well, SoFi CFO was talking to a investor conference. Bunch of investment banker analysts went to that sort of thing I used to go to. And we got some real insight here. I'm going to start with the soft stuff and get to the really exciting stuff, okay? So the first thing is the BlackRock deal selling loans essentially closed with a 5.1% margin gain. That's fantastic. And they sold 15 million in Q3, 100 million in Q4, and they were making this incredible gain on it, 105%, so 5.1% margin on top of that loan, which is just fantastic. It's basically selling above market price. Why? Because the loans are that good quality, and we get into that. So 375 million BlackRock securitization just closed. Again, 105% closing price. Incredible stuff. And that's now about $500 million sold above market value of those loans. So if you thought that SoFi's loan book was looking dodgy or shifty, well, BlackRock is paying for it. They think it's worth more than what it says on the ticket price. The personal loan book is incredibly solid, and they ran through that. Why? Because they actually only approve 25% of loans. They reject literally 75% of loans because they just want the highest scoring FICO score loan books. That's what SoFi is all about, and I'll run you through what that really means. So the room for growth, and they just showed us this, they have a 60% market share of student loans. Not all student loans, but the loans in their sort of bracket, the kind of FICO score people they actually want. They have 60% market share. They only have a 9.5% personal loan market share, so there is some serious room for growth, and less than 0.1% of home loans. So I'd love to see the home loan business finally take off in 2024, which could deliver some massive, massive growth. Now, what they're saying is, this is literally what the CFO just said, in 2024, we expect 50% of our revenue to be from tech platform and financial services, and 50% to be from lending. So the spread across the ecosystem is going to go nuts. They also, and this is very, very impressive, maybe not if you're a customer, but if you're an investor, they're raising their loan rates faster than the Fed is, so making more money. And then they're raising their deposit rates slower than the Fed. So they're making more money. And that's what you do when you're a bank. You basically slightly screw your customer and your depositors and your loan customers, and you collect more money on the loans because the environment just allows it to. It's a little bit like Pepsi earlier this year raised their prices 17%. Why? Inflation. They can sort of get away with it. And everyone goes, oh, it's just inflation. And they suck it up and they pay for it. So you can actually make more money in these rate environments as a bank or as a big, powerful brand than in a boring market, right? So how does this work? Well, look, they get 2 billion plus per quarter in new deposits. What you can do with that? Well, for the deposits, you can basically loan out more of your money. In a simplified sense, you can loan out 90% of that. So what's 90% of that? So you can loan out 1.8 billion of those 2 billion deposits approximately as loans. So the circle keeps going. The more cash people deposit, the more money you can loan out. So you're making money on both sides, right? Because you're making a margin here because you're receiving more money on the deposit money as you're recycling it, and then obviously on the loans you're getting a higher interest rate. So that's basically a bank, right? SoFi is now a bank. He also confirmed we're going to reach GAAP profitability in Q4. Definitely happening. The market is going to go bananas, in my opinion, when they actually find out that this has really just happened. But that's just my guess. We'll see what happens. And guess who just bought SoFi stock? And then we look at the actual valuations here. And somebody now owns 7 million shares of SoFi, valued at $56 million. Who do you think that is? Do you want to know? All right, let me give it away. Goldman Sachs. You know, the lovely, warm-hearted, kind-hearted, gentle people on Wall Street who really care about the little guy, you know, the ones who are like, oh, there is a small man out there, we need to help him out. That's Goldman Sachs. And it's interesting, isn't it? Because SoFi, in a sense, definitely is stealing business away from the big banks. But Goldman Sachs isn't a retail bank, so they don't really care. They're not a JP Morgan, right? They're really an investment, proper Wall Street bank. So very interesting that they're picking this up. I think 41% increase in share ownership in SoFi in the quarter. So there we are. Now, what's SoFi actually worth? So I've got a spreadsheet for you. You can download this. I'd encourage you to download it. It's completely free. felixfriends.org/SoFi. Here, get your pause on it. And it'll walk you through the different scenarios of what SoFi stock can be worth. And there are two things to really understand. One is price to sales ratio. What's the number? At the moment, you know, we're hanging around this sort of 4. Dilution. They confirmed, by the way, that they are not going to need to raise capital to grow. And that's a whopper. So there's going to be no dilution from growth, but there is some share-based compensation. So that's why I'm assuming here 3% dilution per year. And then the real question is, well, how much is revenue going to grow by? So it's sort of these, you know, 1, 2, and then revenue number 3. And, well, how much is it growing at the moment? Well, at the moment, it's growing at 41%. Is that going to do that for 10 years? Probably not. It's quite hard to grow at 40% for 10 years. I know they've done it now for, you know, well, since they're listed. But let's just assume they grow 25%. At 25%, you get to a $51 share price, my opinion. At 30% growth, you get to 76%, and then at 35%, 40%, you get to these really silly numbers. Now, in theory, the price to sales multiple could go up if the market realized that this was actually a tech business, and if the market stopped hating fintech, and if interest rates went down. But those are all things out of our control, so let's be conservative. Either way, in my opinion, this isn't financial advice, just an old banker sharing his perspective. The stock is massively undervalued. I'm not obviously telling you to buy it. I'm encouraging you to do some research, come to your own conclusion. Don't listen to some guy on YouTube. But yeah, that's my opinion on this. So where are we at with the actual share price? So where we're trading right now is, let's get a yellow pen here. We're trading right here, right now. And if you zoom in on that, what can you see? Well, you can see 2 days here of about $7.23, I think. That's sort of support. And then on the resistance on the way up, well, you've got this purple line in here. That's your 200-day moving average line. That really matters. We want to be above that. And then the yellow line up here is the 50-day moving average. That's also really matters. You want to be above that to really get to positive numbers. So that sits just under $8, right? It's just under $8, $7.85 or something like that. The second thing we can look at is where is the market positioned? And you can do this again yourself. Go to optionswatch.io. Links down below in the description as well. And it's a tool that we are building and have built. It's a free whole month trial. Just sign up for the free trial and you can get your hands on it all, see if you like it. And there are two things that I normally look at. What's the biggest green bar? And then also what's the biggest red bar? And the biggest green bar is our resistance. And that at the moment sits at $10. That's 10. And then the support is scarily down here at 5. But there is something in the middle which is quite unusual. You've got a huge number of, well, the green things are calls, and the purple red things here are puts. But there's a huge number of them sitting at $7.50. And that's sort of sucking the stock to $7.50, and it makes it hard for the stock to move. And that's kind of sitting there until December 15th. So until December 15th, I would actually think we have a very, very, very high chance of literally just lingering around what is here, $7.50. So I don't really see this blowing up in either direction unless we get some unexpected news out. So I kind of think we're sort of stuck in this range until the market shifts. And again, you can check on this, see if the market shifts. What you want to see and look out for is exactly these bars here. You know, are they moving? We'd like them to move. The green ones to move up, and we'd like the red ones to move down. That's what would shift the market. So free tool. It's useful. It's helpful. Check it out. Make sure you join me on Tuesday. Literally, it's 3 rules. A child could do this. 3-4 hours a week, you can do this. If you're busy, full-time parent, all of this, you can do this. And once we set up the trade, it's fully automated. So you don't need to look at it. You don't need to stare at charts, none of that. Just rules-based trading. felixschwenzer.com/webinar. Check it out. If you enjoy this video, well, smash the you-know-what. I'm going to leave you with a few words from Winston. He's got some real insight to share with you. And dig into the next SoFi video for some real further understanding of what's really going on here with earnings and where the stock's heading and when it might turn around. So thanks for watching.
Winston, come on.